Hi, it's Lee, and welcome to the Tesla Economist. All right, I thought I'd just do a quick earnings estimate for Q3. I don't think this will be too unexpected or too many surprises. Obviously, we only have 435,000 deliveries, which is 30,000 fewer than Q2 due to the downtime we experienced with some of the factory upgrades. I'm going to estimate an ASP of just over 44,000, slightly lower than the previous quarter, and to be honest, I don't think it would be quite this low, and I am perhaps overcompensating slightly due to the fact I think COGS would be slightly higher due to the factory upgrades. So there may be some slight variance between my estimate and the actual result of COGS and ASP, but I think the actual gross profits themselves should be fairly close. This is a 17.3% gross margin without regulatory credits. However, I think regulatory credits should be higher this quarter, and I'm guessing around 400 million, leaving a gross profit of 3.7 billion and a 19% margin, including credits. I'm hoping that Tesla have managed to increase energy slightly from last quarter, as last quarter was actually down from Q1, so hopefully this quarter has seen an increase. And services and other will likely continue to compound like it always does, resulting in a total gross profit of $4.2 billion. As for OPEX, I'm giving a more average R&D cost when compared to the previous quarter, which was on the high side. However, there's a chance this could be higher than last quarter too, of course. And SG&A likely compounding too, and will be higher than the previous quarter, resulting in nearly $2.2 billion in operating income. As for interest and other, Tesla did have a large $328 million in other last quarter, which I'm not sure we can expect again this quarter, so I think this figure will also be slightly lower, giving us an after-tax net income of $2.2 billion, which then gives us a 77 cents non-GAAP EPS. The consensus is at 73 cents, so this would be estimates. Last quarter, my estimates were within less than 1%. I think because I really try and take on a very objective approach now, without any hope of what might happen. I'm expecting Q4 to be much more exciting, what with the new Highland sales starting, and hopefully all factories full steam ahead. This lower EPS was already priced in as early as the Q2 earnings call, when the factory shutdowns were officially announced. Let's hope this earnings call will have some more positive news and get a good direction of where Tesla is headed next year, namely what is up with Mexico and Gen 3 production, Cybertruck, and 4680 potential. Yes, FSD version 12, but I just find it hard to quantify, especially when Elon keeps saying it will be solved this year. It makes it hard to judge. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.